Sam here, and I'll be doing the premium video for Friday, March 21st, 2025. So the opex is almost in the books here. We got about 12 minutes to go before the market closes, and it's pretty big opex. I think I saw somewhere around $5 trillion worth of contracts are expiring today. So next week, all of those contracts have expired and we get to see kind of a new regime step in. It doesn't mean things will change, but some of the weight, or maybe some of the stickiness, is maybe a better way of saying it, of the market might be relieved, and it'll be a little bit more free to move up or down, I would imagine, next week after all these contracts have expired. So let's dive in here. I think this might be a quick video. I don't see too much that has changed. If you look at the weekly candle here, it's a very exciting kind of doji candle. Very small range. It basically closed where it opened. So not a lot there in terms of anything new to discuss on this larger time frame, which is the weekly. On the daily time frame, it still remains the same thing as well, right? Like you have the 200 here, and you've had so many closes below the 200. I've been a little bit surprised you haven't come up and tested the 200, which is the red line. But again, nothing here has changed. The chart, at least for now, says it's a bearish chart. Later in the video, I'll show you probably the one thing that I see as constructive structure that's building inside of the market. But if we're looking for structure, at least the way that I look at it here on the daily and weekly charts, nothing has changed. So there's not a whole lot of reason to kind of overemphasize a weekly candle that has a open and close basically at the same level. For what it's worth, the weekly squeeze has fired short, as well as triggering your signal there, which juxtaposes your signal back here. So back here you had a nice alignment of the arrows. There was nothing to do during the entire up move, and now you have a same alignment to the downside. So the pressure's still on, but again, it's not going to look good until it looks good. A market under the daily 200 that's had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 closes below the 200. It's not going to look good until it looks good. So we'll save the good for a bit later in the video. Let's go to the QQQ. So the QQQ is going to be the same thing basically. Almost identical chart. So again, not a lot to see here in terms of these particular time frames, the daily and the weekly. There's just not a lot here worth analyzing. I think this market needs to be analyzed from the inside out. I think if you look at it from the outside in, it's pretty obviously bearish. I think that if you're going into next week and you are bearish, you have to watch out for the chart that I'm going to show you later in the video. If you're going into next week and you want to be bullish, then you'll also be watching out for the chart that I'll show you later in the video. But personally, I don't really see anything here on the daily chart that's worth mentioning, right? You've basically just been in a sideways range here for basically all week, and that's reflected again in your weekly candle right there. So no need to overemphasize the old NASDAQ. Let's jump over to the small caps. Take a quick look here. Slightly better weekly candle than the other things that we've looked at. On this one, it is actually putting in a higher, at least so far, it's attempting to put in a higher close than last week's candle. That would break the streak here. You had a down close there, down close here, down close there, down close here, down close there. This would break that trend at this point. So there's been a tiny bit of outperformance in the IWM relative to other things. I still don't necessarily trust it. I think that if you want to be bullish, I would prefer to be bullish in the SPY or the Qs. But something of note, this is the first thing of note that I've seen so far in the indexes, is at least on a weekly time frame, is that the IWM is set to have a higher weekly close for the first time in 1, 2, 3, 4, 5 weeks. So that does potentially introduce a ray of hope for the bulls next week. Let's go to HYG. I look at HYG as a function of interest rates as well as risk appetite. So ideally, if you are bullish, you want to see this chart go up. That means that credit conditions are healthy and that folks are willing to take on risk. And as of right now, the HYG is not giving a whole lot away here. You know, you're below the anchored VWAP, you're above the 200, your signals are completely mixed. At the end of the day, you end up with a neutral chart. If you look at it, it's pretty neutral as well. So it's not really giving anything away here, so this doesn't add a whole lot of emphasis either way. I would say it leans bullish only because the weekly is neutral but leans bullish, and the shape of this 200 is still upwards. And even though it's not really holding as cleanly as you'd like to see, it is generally holding. So gun to my head, I would say that HYG is ever so slightly in favor of the bulls going into next week. Let's look at VIX. So VIX is going to show us an interesting signal. I'm not entirely sure how important it will be next week, but it is something that I would note. And the reason I know this one is because we looked at it live in the room together. So there's really only one thing I want to emphasize here on VIX, and that is one, at least as so far today, you're trying to close below 20, so that definitely is a step in the bullish direction. You also have down thrust here, which is a very key component for the bulls. Now mind you, the VIX has come down a lot, but the market hasn't done a lot, so maybe that's just a precursor to something. But really the one thing I want to point out here on the VIX that stood out to me in the live session was right over here, and that is on the weekly chart. So if you look at the squeeze histogram here, let's ignore the actual fact that it's just in a perpetual squeeze and just look at the squeeze histogram. If we go back about a year, this was the last time that the squeeze had an upward bias, was last April. And from April 24 all the way through basically now, the squeeze has been in a negative histogram position, right? So almost a full year at this point. Now the squeeze has 3 bars of sequential upside on its histogram. So is that a precursor to something? It very well might be. So there's only really 2 ways this plays out. Either A, you get a giant VIX spike sometime next month, or B, you get the most epic VIX crush rally that we've seen in a long time next month, right? Now, just looking at the squeeze histogram here and nothing else, the bias would be that this actually fires to the long side. If, you know, we come in next week and we start to get a bar or 2 against the grain here, right, get a couple dark blue bars to the downside against the grain, then that would actually start to lean more bullish. For now, the VIX I think is kind of happy at around 20, so it doesn't seem like it's overly concerned here at 20 or 19. The only thing of relevance here, from a short-term perspective, this is really positive for you if you're bullish. From a medium-term perspective, this is a concern if you're bullish. So just something to point out there, and something that I would at least keep an eye on. It's a very simple thing you can track, is just look at the squeeze histogram and see if it continues to step up. And then lastly, let's close with this. So not a lot really new things to cover in this video. You know, when you have a tiny weekly range and you know, you basically open and you close where you close where you opened, there's not really going to be a ton to look at least on the index level. The one thing that stood out to me was the IWM breaking the streak of 5 weeks sequential close lower. We might actually be seeing the Qs and the SPY here try to do the same thing into the close. It looks like SPX actually went green, so that might be enough to give it a positive weekly close relative to last week. So just little things like that. But the one thing that I've been tracking here and that I was showing in the room earlier was this. This is the ES hourly. This is just the continuous ES contract. And if you look at the shape of the 200 here, I'm just going to loosely sketch it in. Right, it's a very steep angle of attack, right? And it's very difficult to reverse downtrends that have that steepness to their 200. But look what's been happening lately. One, you overshot the 200, and then you come back and test it. And you see how when it gets tested again here, it's actually in a flat position, right? So this position of the 200 where it's flat and underneath price is a completely different ball game than when it's steep, angled down and above price, right? These two are different regimes, and basically the flip happens right there. So going into next week, I think it's clear enough as to what is holding things up here, and I would say that this line right there is basically the over-under, right? Of course, you know, if you're bullish, you want to see them take out that swing high there right around 57.60. And if you're bearish, you want to see them take out the low right around 56.50 to 56.40, right? So again, when you really look at it, it is just a glorified trading range when you sketch it in correctly. But if you look at it, you know, it actually does have some seeds here of the bulls doing some work. They have not given back the level that is critical for them to hold, which is right there. And as long as that is intact, then the bulls might have a good chance to have a strong week next week. So you kind of have to look inside the clues a little bit, because again, if you're looking for daily reversal signals, I don't necessarily see any clear ones. Certainly don't see any on the weekly. But when you combine the Russell or the IWM putting in a higher weekly close and breaking the streak of, I think, 5 or 6 down weeks in a row, as well as this signal that I'm just showing you on the screen now, with the 200 changing shape from a hard angle down to a flat angle with price above, that's the seeds of something. That is the best that the bulls have had in a very long time. So we will see what they're able to do with this going into next week. Again, if you're bullish, you've got to see them take out 60 to the upside, 57.60. And if you're bearish, you got to see them take out the low. And if it does take out the low, you have a huge pocket underneath. And frankly, I think if you take out the high, you probably have a nice pocket to about 58.50. So about 100 points of upside in either direction, depending on what direction the bulls want to go. But the main thing I'm personally going to be tracking next week that I think is the most clear and the most active and actionable is this chart that's right in front of us. It's the ES hourly. Mark it up with your levels, put the 200 on there, and trade accordingly. All right, guys, that's my time. I hope you have a great weekend, and I'll catch up with you guys in the next video. Cheers.